Good morning to all. We have to talk about the euro today. Over the past 24 hours, maybe actually less than that, the geopolitical landscape has completely shifted and the US dollar is suffering significant losses. We have a 2 week ceasefire deal between the US and Iran, brokered by Pakistan, which includes the immediate reopening of the Strait of Hormuz. Might be immediate or actually Friday, who knows? They still need to negotiate. Because of this de escalation, of course, Euro USD is up over 1% since yesterday night, above 116.65, an important milestone if you asked me. So let's break down exactly what this means for monetary policy and also the technical outlook for Euro USD. We start with fundamentals as always. The energy crisis in the Middle East now, of course, before had markets terrified of surging inflation, and there were expectations of tighter monetary policy across major financial centers. Recently, ECB's Martin Kazaks warned that might need to raise rates multiple times this year, and markets actually were actively pricing in 2 to 3 rate hikes. We also waited for the FOMC minutes tonight and the US PCE tomorrow and inflation data on Friday. So, without any major news in the Eurozone, in the Euro area, we might just really depend on what happens with USD for the rest of the week at least. But with oil prices now set to flow freely through Hormuz, again, the inflation panic is cooling off. The market is doing a U-turn. Even at the end of last month, traders were pricing in over a 50% chance of rate hikes. So, following the ceasefire event, CME um, Fed Watch data shows that high probabilities have totally collapsed down to practically zero for the April meeting. It all depends on how the geopolitical landscape continues to evolve this week, of course, and especially we'll have no major economic data, as I said before. All eyes are on the US PCE and PCE, on top, of course, any geopolitical tensions or developments that could see flows back into the dollar. So we're looking at the 4 hour chart, and because of the dollar sell-off, Euro USD has broken out to over 1 month high today. We have decisively pushed above the psychological resistance here at 1650, which is 13.2 Fibonacci. And this becomes now the most important level to keep an eye going forward. If bulls manage to maintain prices above 11650, means we might be entering an accelerated uptrend, which is also very close to be um, more evident as we are breaking outside this base trend line channel. Finding support above that channel opens the door to a very specific target zone, which is between the 50 Fibonacci and the 61.8 Fibonacci retracement levels. But if you look to the left, you can see that this zone actually, this zone, um, we have seen heavy price consolidation before. Okay, so it's likely that we're going to revisit that territory. It's more like of a high activity level or area. A quick word of caution though, if you look at the RSI, we are close to 77, close to 80 as well into our bot territory, but um, it doesn't mean that we're going to reverse, but it means that we might see some sort of consolidation before any other further upside. But as I said, again, it's important, even if we do see consolidation, that we maintain 30.2 Fibo, because if we do lose it, then we're looking at 116.40, 116.27. These levels are very important support levels. And I consider this to be some sort of line in the sand. If we lose that level, it's likely that we revert all the gains and we'll go down to 115.91, which is the 4 hour high momentum candle, a liquidity level for sure. And we will, of course, fall into this flag pattern once again, which would mean that we expose much lower territories the 114.50, and then all the way back to 114.10. Importantly, if that happens, we will render these as a false breakout. Okay, a false breakout. Now, I would watch the 116.50 level closely today, because if the situation with the FOMC, which is likely to not be as hawkish, because we'll be looking at the FOMC minutes whether the FOMC members really discussed hikes, but I don't think that would have been the case in the last FOMC. So the idea would be to long this to the 61.8 and put a stop loss just below the high momentum candle. Okay, this is more of a swing play, I would say, and relies, let's say, on the retest of the support, which typically acts as confirmation. Now, those who are a little bit more risk averse might want to take that trade. Those who are have more risk appetite might prefer to trade more aggressively. In either case, we never know what's going to happen. But the important thing is that we have to watch that 116.65, 1650 very closely today, and be prepared for volatility heading into the FOMC minutes, the PCE inflation, and the US inflation on Friday. So trade safe, and I'll see you in the next video.